I'm just going to say this flat out. The AMC had a very wonderful day. Like, you could not expect anything more out of AMC than what we've seen today. And we were down 2.83%. That goes to show how bloody the markets were overall. And AMC was actually one of the best performing stocks in my portfolio. Let's take a look at that portfolio. One of them, you have Square down 6%, Fubo down 10%, SoFi 5.3%, Lucid down 6%, Affirm down 4%, PayPal down 6%, right? So it's relative here. Relative to what the markets did, individual stocks that are unprofitable, that have high levels of growth like AMC, were down much more than AMC. Just not even in the same ballpark as what AMC did today. And AMC is actually positive here in after hours, whereas the S&P 500 pretty much went down all day today, dropped $13 from the peak to the low, which is an absolutely incredible move, but still down here in after hours. AMC popping in after hours and did much better than a majority of stocks on the stock market. What is exactly going on with AMC stock, and why is this such a bullish sign? That's really what we need to talk about here in this video. But as well as that, we did get Fed Jerome Powell today, and he said some things that really didn't give the markets too much clarity, but I think the markets are starting to realize, hey, the Fed is saying they are going to do XYZ, and they are actually going to follow through with that. So I think there was actually a lot of algorithmic selling that happened today, but we're going to get into that and much more. If you guys want to come join the trading group live in real time, every time I make a trade, I send out an alert. It is not a recommendation. It is simply what I am looking at, where there could be some possibility. Before you guys take that step, come join us. Make sure you are ready. You know the risk associated with options. You could lose all of your money, you could lose half of your money, or you could 10x your money. That's the way options work. So not a recommendation, but we have been killing it over there. We hit the Facebook puts today. We hit the Tesla puts before they reported earnings. All of those trades are like 300-400% winning trades. I go over my strategies, what I plan to do. Like I said, not a recommendation. If you guys want to come join us, link down below in the pinned comment. Get in within the next by this Friday. We're going to be upping prices because I kind of want to make that group more exclusive. People that actually want to be there and not people that kind of just join and then stop paying for it and then just get everything for free, because there's a lot of value provided at those prices. But nonetheless, we got a lot to talk about, so let's get to it. AMC stock down 2.83%. Like I said, relatively strong move on the day. Nothing less than extraordinary, just wild. I would not expect this. If stocks like Fubo, Lucid, Square, PayPal down 5 or 6%, I would expect AMC to be down a good 10%. That did not happen. Not even close to that. We could have fallen twice as much, and we would still not be down as much as Square or PayPal, and arguably those are much better fundamental buys. So what is this actually telling us? Well, I think overall this is telling us that there's a lot of strength in the business and possibly more catalyst here on the near term horizon. Obviously, shorts are still not covering though. The Ortex data, they're giving us some wonky numbers. It's not the case, right? Shorts are not slowly covering all of a sudden on AMC stock. That's simply not how shorts work. That's not how the mentality of shorts work. But what you are seeing is a lot of call activity that has been coming through. For the day, positive order value of 45%, 13 orders totaling 5.52 million. Over the past 1 week, 124 orders totaling $111.25 million, positive order value of 77%. So that is a very bullish figure for this last week. 77% positive, whereas the stock has been dropping. That's what is really helping to keep us afloat. And I think a lot of people are taking advantage of this move down that we have been seeing to actually load up on more shares of AMC. As simple as that. Now, at the same time, what happened today in the broad markets? Well, we had Fed Jerome Powell that did speak twice today. He spoke at the IMF event, and then he also spoke at a Paul Volcker ceremony. He was the Fed that stomped out inflation in the 70s, pushed us into a recession, but nonetheless got 20% inflation under control. So he's widely respected as being one of the best public servants that ever serve the public, right? So he did make a speech there. Nothing came out of that one. But the other one, you're getting some of these headlines, and we'll go ahead and look at the headline here and take a look at the key points. It says, Powell says taming inflation absolutely essential and a 50 basis point hike possible for May. The key points: Fed Chairman Jerome Powell on Thursday said the central bank is committed to raising rates expeditiously to bring down inflation. That could mean an interest rate hike of 50 basis points in May as prices rise at their fastest pace in more than 40 years. It's absolutely essential to restore price stability. He went on to say that without price stability, you cannot have an economy, you cannot have low unemployment for an extended period of time. You're talking 5 to 25 years, right? You can't have that unless you have price stability, and it's really about getting inflation expectations under control, and that's what they need to do. It's not just saying that you're going to do all these rate hikes, but actually doing them until you don't have to do them anymore. And I think the markets have been expecting these rate hikes, but I think the markets were not really realizing reality that we're going to see these rate hikes, that it's going to slow down the economy. Now, at the IMF event as well, that is the International Monetary Fund, they had the ECB President Lagarde there. They had Fed Jerome Powell, was it Indonesian Fed President, a couple other people as well. Some people were on the video call, and they were basically talking about a global recession, that it doesn't look very likely, but they have to be careful with their policy so they don't push us in that direction. They talked about deglobalization, that the world is basically heading in that direction, and globalization, one would argue it's good or bad. I really don't have a huge opinion on it, but just to kind of put that into preference, what that is, that would be like Apple working with China to make cheap iPhones, right? That's globalization, working with other countries for your benefit, and usually it's a mutual benefit, right? It was a benefit for China to make those. It was a benefit for us to pay less in labor to Apple. Obviously, not currently saying that because we've lost a lot of jobs by doing that. You know, things are not as good, right? We'd rather have the Apple jobs here. That's not the point. This is purely economics, nothing political about this. And they were saying that the world is heading away from globalization, that they're heading more to a I don't know what the word for it actually is right now, but only looking out for themselves, or really reconsidering who they do business with. And the markets did not like that. There was not a huge reaction though during that. The reaction really came before and after that. It was surprisingly unvolatile during that speech. But like I said, I think the markets are finally starting to realize that, hey, what the Fed says is what the Fed is going to do. Maybe we should sell off some stocks now. And that's exactly what happened. The NASDAQ dropped 2.07%. Russell 2000 dropped 2.29%. S&P 500 dropped 1.5%. And even the Dow dropped 1%. The VIX up over 11.5%. Now, the bond market, the yields are also going up, which this is a normal market correlation, kind of. We've seen the bonds go up a lot recently. So what I'm looking for is the bond yields to actually top out or even come down slightly, and the markets to come down in a very dramatic way. If you guys follow this channel, you know that I played that CNBC video for you guys, how the guy was basically going over how the bonds have dropped so much and the stock market has not dropped nearly as much as that divergence is not normal, and it will correct. Usually the bond market is right. So the bond market took that lead down first, and the stock market will likely follow at some time into the future. Now, it's likely to be based off of earnings. If earnings are not as great as people expect, that's really where you could see a big move down in the markets. I don't really think the Fed coming May 4th will do too much to the market, since we are expecting it. And that is obviously, we'll get you guys the oddly specific time frame on that, how long that is. That is 1 week, 5 days, 21 hours, and 11 minutes away until that Fed meeting May 4th. That's going to be a big catalyst, but it's almost 100% priced in that we're going to get that 0.5% rate hike, especially after today. Pretty much priced in. So now what do we have to look forward to into the future? It's going to be earnings as of next week. Like I said, we just had Snapchat earnings, which we will talk about here in just a second, but we want to look out and we want to start positioning for these earnings for next week. And that's going to be very important in my personal opinion. You do have next Monday, Coca-Cola, Activision, Philips, companies like that. Not a huge day. Tuesday, you have Microsoft, Google, UPS, Visa, 3M, GM. On Wednesday, Facebook, PayPal, Ford, Teladoc, Qualcomm, Spotify. Those are going to be the big ones. You do have Boeing as well. Thursday is going to be the holy grail of earnings. This is going to dictate what is going to happen to the markets really for the next 3 months after this until the next earnings season, because you have Apple, Amazon, Twitter, Intel, Roku, Robinhood, Caterpillar, Nokia, and Southwest. I believe if you just factor in Amazon and Apple, it controls like 8, 9, 10% of the S&P 500. So if they were to drop or pop a lot, it's going to affect the markets in a very dramatic way. Now, I am worried about Apple. Just because simple Econ 101, they've had a huge expansion over the past 2 years. I think it's going to be pretty hard to grow revenue numbers, and I don't think the markets are really expecting Apple's revenue to drop in a substantial way, and I think it's very possible that it does. But I'm even more concerned about Facebook after seeing these earnings from Snapchat, which were a mix of good and bad. The stock was actually pricing in about a 20% move. We didn't even get close to that. We got a 5% move to the upside after the stock had initially dropped about 26%. The stock went nuts right after earnings came out, dropped a lot, and then has recovered. So we're not quite clear on what direction that will be. But if Snapchat earnings were, let's just call it not ideal, then Facebook earnings are going to be terrible, in my personal opinion. Snapchat has kind of slowly been eating Facebook's lunch. So it makes me pretty concerned for Facebook. We do have trades that are up massively today, playing the put side. If you guys want access to all of that information, link down below in the pinned comment, like I said. Nonetheless, let's switch back into gear for AMC stock. We looked at the option activity as far as the short interest. That is sitting at 19.29%. The current shares that are sold short of 99.4 million. Cost of RMAX of 2.73%. Utilization of 100%. And days to cover sitting at 2.36. So still primed for a short squeeze, but I want to see liquidity conditions get even tighter here over the next coming weeks and coming months. The max pain for AMC by the end of this week is $18 per share. Stock Go Tracker data still has us at about 1,200 calls that are 1,700 calls that are in the money, 67,000 that are out of the money, and that has definitely helped us to move up today. Now, if we take a look at the key technical levels for AMC stock, again, you need to break out above the 50-day moving average, and that is at $18.64 per share, or come down and retest that $15 level. Those are going to be the key points to be watching for. If we break above the 50-day moving average, next key level is going to be the 100-day moving average. That's at $21.14 per share. The RSI is at 42.18, so still on the oversold side, and the MACD is extremely bearish at this current point. So that is going to be all for this video. Thank you guys for tuning in. Hope you guys don't mind good old Ling Ling over here. She loves the camera more than she loves me. So hit the like button, subscribe to the channel, do what you guys got to do. Trading group down below in the pinned comment. Follow me on Twitter, all of that good stuff. You guys enjoy the rest of your day, and I will see you in the next one.